into the videos, and just want to encourage you, if you like the video, share it. And if you've never subscribed to our YouTube channel, youtube.com, Billy Epperhart, and we would encourage you to subscribe. Today we're answering some questions again, and one of those is the types of IRA. The question is, what are the different types of IRAs and what is the best one? Well, the first thing I would say, if you're employed at a company that actually has a 401k, or a 403b, or a 457a, those are vehicles that are treated from a tax purpose exactly like what we would call a traditional IRA. They're very similar. And so if you have an employer that is actually matching your contributions up to a certain point for a 401k, then we certainly encourage you to participate in that 401k plan. The best IRA, though, especially for those of you watching that may be younger, is definitely what's called the Roth IRA. And in the Roth IRA, the advantage of that is the disadvantage is you do not get the tax deduction, which for most of you that are younger would be somewhere between $2,000 or $3,000 a year. But you don't get that tax deduction. But what you do get is you get all the money that you put in, plus all the earnings that money has, grows and increases for you tax-free. That means when you get to the age of, say, 59, all of that increase that's happened, you don't have to pay taxes. You get to take the money out without any tax consequence or any taxable event. However, if you put your money in traditional IRAs, you do get to count that $2,000 to $3,000 off a year against your income. And for those that are older watching it, it's quite a bit more. It can be, depending on your plan, it can be as high as $15,000 or $20,000, especially if you're an individual business owner or you own your own business, etc. But to keep it kind of simple for everybody watching, the point is that even though you get the $2,000 to $3,000 a year off of your taxes in a traditional IRA, the problem is that all of that money, as it grows and increases, and the contributions you make, including the contributions you make, plus the earnings that those contributions make in the IRA, when you go to pull those out at 59 and a half, when you can, all of that is taxed. The original money you put in plus the earnings. So both of those are taxed. And so a lot of people who retire today under a traditional IRA have found themselves actually paying more money in taxes than they did when they were actually working. In other words, they paid a higher percentage of their income in taxes. And so for those especially younger folk watching, I would really encourage you to put your money in a Roth IRA. Now, for those that may be older watching and you go, well, what do I do? Well, then what I encourage you to do is potentially, depending on your circumstance, but for some of you watching, it would be appropriate just to not put your money in any retirement vehicle. Just take your money, pay taxes on it, put it in a brokerage account, and then allow that brokerage account to grow and increase. A brokerage account is the same thing as an IRA, just doesn't have a retirement shelter around it. And so then when you start taking your money out, in that case, then the only thing that you're actually paying money on is the actual earnings. And there are strategies that you can take to actually minimize what your tax consequence will be. So the two primary IRAs are a traditional IRA and a Roth. There are others, but the two primary are traditional and Roth. And I encourage the majority of you watching this video, the Roth IRA is the correct way to go. So this is Billy Epperhart. I want to say appreciate you watching, and we want to encourage you to go to YouTube and subscribe to our channel. We look forward to seeing you again right back here. Bye-bye.